record in case anybody else wants to see it. Stephanie Barber's coming in. She's our rep from First American. Hi, Stephanie.
Oh, cool. Awesome.
So I'll let people in as we do this. Thank you guys for coming. I'm so excited. You know, we've been doing Zoom calls and, you know, with friends, and it's so fun to like see each other versus just talking on the phone. So thanks for joining Gina and I. One of the reasons why I wanted to do this was just because there's so many things in the news these days that like people like they're talking about things and people don't really understand it. So like the other day I called Gina and I said, well, what's the deal? You have to have 20% down now in order to purchase? And she was like, what are you talking about? So, you know, she researched it, and it turns out it was just Wells and was it the bigger banks, right? Like Wells.
Yeah, Wells and Chase.
So I was like, I think we should do just a Q&A so that people can kind of really just take a look and see what, you know, what's going on. Like if people have questions.
And they believe it. That's the thing. They believe it to be true because they saw it, you know.
Yeah, exactly. And I mean, I have questions, so I can imagine, you know, that other people may have questions too. So that's kind of why I wanted to do this. And feel free, I think I have, yeah, there is a chat box set up if you want to chat, but I have a couple of, you know, questions already that, you know, I wanted Gina to kind of touch base on, and then we can kind of go from there. Does anybody have any burning questions that they want to ask her right now?
Hi, Trish. Here,
hello.
I'll show you guys my shirt.
I love it.
So, any questions out the chute?
10:30 thing, and then pretty open after that.
Hi, Stephanie. All right. So the one thing that we were just talking about was like, do you need 20% down to buy a property? And I asked you that I think yesterday, or the day before.
You want me to kind of expound upon that a little bit?
Mm-hmm.
Okay. Can everybody hear me? I'm Gina Chavez with Cornerstone Home Lending.
Yes.
Yep.
Good morning.
Yes.
Joining us. This is so fun. So anyway, the whole putting 20% down thing is not accurate for mortgage bankers, and Cornerstone Home Lending is a mortgage banker. We don't take deposits and things like a Wells Fargo does. Okay. So it's the big banks that had made an announcement saying that they required 20% down and a high FICO score, which basically what the big banks are doing, and they can do because they're ginormous, is they can basically take the cream of the crop. Why not in a time like this, right? And but mortgage bankers are the ones that we do the bulk of the business in the mortgage industry, and because that's all we do. We're really good at it. Most people who work for mortgage bankers have been in the business a long time, know what they're doing, and know how to get deals done. So we still have FHA loans. We can go down to a 640 FICO. That's 3.5% down on a purchase. And we also still have, you know, regular conforming loans that we can do up to a loan amount of 510 400. We still have a 3% down, you guys. So 3%'s not so pretty, I will admit. If you have really strong FICOs, and it's a pretty good loan amount, but otherwise the mortgage insurance is quite high on the 3% down, but it is available. So, you know, we can certainly still help people get into homes. We still work through all the issues, and, you know, because every deal seems to have some sort of an issue, and we're great at working them through and taking them all the way to close.
So what about, you know, you're talking about the down payments. I've also heard, like, we have a couple realtors on, and I've also heard that, you know, if you have a listing and you get a contract on your listing, you have to really take a look at, you know, the lender on the other end, and you know, if they can close, like, can you still do 30-day closes? Are you at 45 days now? Like, What are you looking at in that?
That's a really good question. And this piece has not changed and has always been the same. As a listing agent, you should pick up the phone and call the loan officer that's on the pre-qual letter. And I got to tell you, I get about calls from about 10% of listing agents. They just accept the offer and move on, and and just hope that everything's going to be okay. I think it's kind of weird, but so absolutely, please call the lender on the pre-qual letter. Please ask them about everything, about before you accept it or make a counter. Ask about the close of escrow, ask about the borrower. I mean, obviously we're limited as to what we can divulge, but I think a lot of it is sometimes just the picking up of the phone, frankly,
Yeah.
and or calling back right quickly, because if you call the lender on the pre-qual letter and they don't get back to you for 2 days, that's kind of setting a precedence for how the transaction's going to go. So, but to answer your question about days to close, I mean, we're still, it's kind of case by case. Cornerstone Home Lending, and fortunately every company that I've ever worked with, we've always been like purchase business lenders, right? That's our priority, as you guys, realtors, and the people who are purchasing homes is our priority. And then refinances, of course, are secondary. It's kind of tough right now because we have a lot of refinances right now. But so typically the answer is yes, I can still close in 30 days. It depends on where I'm at with the client. I mean, you hand me a client and a contract and a client that I've never spoken with, we might have stuff to deal with and I might need a little bit more time. So, but I will communicate with you throughout the process. Also, appraisals are taking a little longer, and depending on if the home is vacant, if there's people in there, that can kind of be an issue with inspections and appraisals. So, I mean, if you can get away with the 45-day, you're probably best. But that's always a conversation we want to have if you want to do a 30.
Yeah. Now, what about, so you touched on refinance. So what about like if someone should refinance and the things that are coming up right now with the current virus situation as far as forbearance, like how does someone determine if they should do that or can do that? Or, I mean, I know it might be a little bit of a complicated question.
Yeah. Thank you for realizing that. Loaded question.
3 questions in one.
And they're like ginormous topics. Okay. Okay. So let's hit on the forbearance thing real quick, because this is a super hot topic right now. And it appears that a lot of people are applying for forbearance, whether they need it or not. Okay. Forbearance is there obviously for people that lost their jobs and have, major financial situations that are negatively affecting them. So here's the deal. Right now on Fannie and Freddie, you can call in, and you don't even need to know if you have Fannie or Freddie or whatever. You just call into your servicer the statement that you make your mortgage payment to, and you call in, and you can literally ask for a forbearance without any extenuating circumstances. COVID-19 is your extenuating circumstance, okay? So they'll just grant it. So what they're going to say is they'll give you 3 months without a payment. On the 4th month, you have to come in with all 4 payments.
Okay.
Yeah. So first of all, who can do that? Okay. So say your payment is $2,000 a month. I mean, I don't know. I feel like that's a can of worms. That's not necessarily a good thing. And then, however, once you get to that 4 months and you can't make the payment, then they'll start working with you regarding like a modification or something like that on your mortgage. We are not sure because we haven't seen, we're just in April. So this will be the first month of forbearance for a lot of people. So we're not 100% sure what's going to happen to your credit.
Yeah.
But we do anticipate that if you are unable to make that payment, that large 4-month payment on the 4th month, and you go into some sort of a modification plan with the servicer, we are quite sure that then you are going to show 4 months of rolling lates.
So they basically don't charge you a late fee for 3 months. Well, or
That's
you
right.
don't. Yeah, they let you just
That's right.
pay it late, but you still have to pay it. It's not like you just skip that payment.
No, and it's not, people think, they tend to think that they just put it at the end of your mortgage.
But it's not.
Right? You know, put that $8,000 at the end of my mortgage and no harm, no foul. It doesn't, that's not how it goes.
Gina, I have a question. Is this just with your mortgage company or standard?
No, this is standard.
Okay.
And it's a big problem for our country right now because the servicers are just getting pounded with all these forbearances, whether they're needed or not. See, that's the problem, is that some Americans are calling in and they're working, like they're fine. There's no, but they're like, well, shoot, why not, right?
Yeah.
I mean, and but they're not understanding the consequences. And so I don't know. I don't love it because then, get this, particularly in Arizona, you guys, most people have equity in their homes. So why would you do a forbearance? I mean, it just doesn't even make sense when you're risking really messing up your credit. Because if you have a 30-day late, 30-day late within the last 12 months, we can't refinance your loan. So we need to look at refinancing. Anybody you know that's talking about a forbearance, let's talk about a refinance first. And then, you know, if that's not going to work, then of course, then I will suggest they do the forbearance. You know what I mean? It is what it is, as long as they keep their home at that point. They need to know that it could be 12 months before they can do anything once they get out of that forbearance. Do you know what I mean? Just because even if they sold the home after the forbearance, they still have it on their credit. So they're still going to need 12 more months before the purchase. So then, where are you going to live? There's a lot going on with that. But the cool thing about refinancing is that I can, you know, save people money. I mean, most people I can get a better rate, and they skip at least one mortgage payment. Sometimes I can work it to where they can skip 2, which I feel like that's pretty close to, that's a big help. I mean, if you're struggling at all, that's a huge help. Is 1 or 2 mortgage payments that you get to miss by doing a refinance, and then get a lower payment. And then also, if we did cash out, you know, pay off debt, things like that. However, you still have to have a job. You have to have a job, and your continuance of employment has to be excellent on the form that we have the
So is it,
employer fill out.
I always thought if your interest rate on your mortgage that you're paying and then the refi rate was about a percent difference, then it was worth doing it, like, because you have to pay closing fees and all that. Like,
Of
what would you
course.
tell somebody?
The thing about refinancing and all mortgages really is they're individual. So, I mean, it depends on what they need, Sarina. If you're just doing it, just a rate and term refinance, want to lower my payment, that 1% is a good rule of thumb. However, if it's a higher loan amount, say 400 to 500, I could probably save them quite a bit of money just on a 0.5%.
Okay.
But so cash out, you know, where people need cash to pay off debt, to, you know, help themselves make it through this crisis. As long as they're employed, yeah, it's becoming a problem, you guys. It definitely is.
Well, and just to be clear too, because a lot of the banks for auto loans are offering a deferment on payment. And I think that's
right.
where the misconception is coming in. Mortgages do not allow for deferments, correct?
You're exactly right. And the auto companies are, yes, they're saying, we'll just put that payment at the end of your note, which is super helpful. I mean, no doubt, but yeah, it's the technology. And people are just, they jumped on it. I mean, the minute that thing was announced, the services were just completely overwhelmed.
Yeah. So we have a question. Carrie put a question in the chat. Unique property types that may require a special loan program, such as manufactured or multifamily. Do you see those programs going away or changing? And what about down payment assistance programs?
Ah, good. Hi, Carrie. Well, Cornerstone has suspended all down payment assistance. So I don't know that that's true for all lenders. I kind of have a feeling, because typically when we, just like with when you start hearing these announcements, they do kind of roll down the hill. So I would say it's probably true for other lenders as well, but we are not offering it anymore. That happened, that announcement came out not last Friday, but the Friday before. And so that takes care of that. And yeah, manufactured is tough. It's just super tough right now.
Yeah, we had a buyer, he was buying the property more for the land.
Yeah.
And because of the type of property, it was the loan program for that property type. And he really just wanted the land that the house was on, but it happened to be a manufactured home. And because the program went away, he couldn't qualify for the home anymore because the property itself couldn't go for the other loan type that he did qualify for. So, and I'm bringing up the question just so that for education purposes, in case you have those buyer types, that's where the higher down payment's going to come into play if you do need to purchase the property with, a conventional or other type of loan.
Yeah, it's tough. Manufacturers have typically been tough. I mean, they're just so unique, and there's so many variables with the actual property itself and the land,
right,
and comps and all that. But yeah, I've ran a couple of them lately, and I couldn't even get a loan to pop up 10% down. So I would imagine that maybe I could do it at 20% down, but they have to have good credit, and it's a tough combo.
So those are going to be just tough properties to sell at this point, and
Absolutely.
whether or not you're a buyer or a seller.
And if you're even contemplating a listing, I would reach out to me, your lender, and just say, I'm looking to list this property. Here's the address. Here's, you know what I mean? At least I could do a little bit of background check and kind of say, because I feel like as a listing agent, when you list a property, you need to know who your buyer's going to be, right? You know, who is going to buy this home. And so we need to kind of back into, this isn't going to be a 3% down,
Right.
It's going to need, so what do we need? Do I need a 780 FICO? Do I need, because you need to know when you go to list it, so that you're not just having people write offers and it's a kind of a waste of time.
Right.
So I know that's a tough property. I'm sorry. And then you said multifamily. I've not really seen any problems with multifamily. I mean, we still have FHA. FHA is a great product for the multifamily.
Okay, good.
It's pretty amazing, actually, because you can use the rents in the other units. It's pretty cool. It's a pretty cool program, but there's not a ton of multifamilies available out there, because people figured that out already, and they're sitting pretty if they bought them in the last several years. They've done very well with value and everything. So unfortunately, I wish we would build more, but mostly those are older properties, like in the central Phoenix area, stuff like that.
Okay.
So one of the things that I think is interesting, I'm going to touch on a little bit about like what's going on in the market right now. We have a Crumford report, which gives us
we love
data on the Arizona real estate market. Tina Tambor, who's part of the Crumford report, has been doing webinars like every week. So our inventory was already very, very, very low. So it started dropping last July and has been dropping every month since then. We've had a lot of people that are relocating to the area. So in March, our inventory was down 41%. The month before it was 39%. January was 32%. So April, it was no surprise. It was down 23%. So active listings were down 23%. Typically the demand has been higher. However, in April, the demand did go down, so it was also down 24%. What we are seeing is the short-term rentals their reservations have canceled. And this was their money-making season. This is March and April where
Unfortunate,
come in
yeah.
for spring training. And so some of them have either chosen to sell or to rent long-term. The iBuyers are gone, so they've lost their funding. So that would be the Open Door, the OfferPad, the Zillow. I know of like some of the organizations like Redfin, they've laid people off.
Open Door too.
Yeah. I mean, we are seeing properties still get listed and selling. You know, people are just taking precautions as far as, you know, safety with gloves and masks and wiping things down. Let me see. There was an article that came out in the Phoenix Business Journal. You know, basically they're looking at this. What did Gina Chavez said? She said it's a kink in the hose. So, you know, she says like, you know, it's a little bit of a slowdown, but we were increasing at such an alarming rate that, you know, she doesn't see the market completely crashing here like it did in 2008. You know, it's just a little bit of a slowdown, which, you know, at the rate we were going, it's probably, you know, will kind of help. If anything, now we have our more serious buyers out there and not necessarily, you know, all of the snowbirds and the people that are relocating. You know, they'll probably be out here like in the summer, or we'll see what happens when the lockdown gets lifted. You know, obviously we all are wondering how that's going to work, but, you know, in general, it is still, you know, it's still happening. People are buying, selling, you know.
Can I say, quote Tina Tambor, because I think this is a perfect time to say it. The pandemic does not negate the need for housing. How's that for just a bottom line statement?
Right.
We still don't have houses and people are still moving here in droves.
Mm-hmm. Exactly.
Mm-hmm.
So does anybody have any questions? You know, we've been kind of chatting. Are there any other questions that people have? I don't want to, if anybody has anything that come up, let me see. I'm looking at the chat. What was the other thing? How about, Gina, as far as if someone's thinking, what are the things like if you're thinking about buying, let's say in 6 months, what are the things that you should do now or not do now, like buy a car or, you know, for people, because I mean, I actually do forget to tell people, like, you know what, if you're going to be buying a house, like, don't make any large purchases, especially like, you know, furniture or anything that comes up, because it really does. You have to explain it, right?
Yeah, you do have to explain it. The best thing I would recommend somebody looking to buy in about 6 months, even up to a year, frankly, is to talk to a lender and have them review your finances, your income, your plans, your goals, everything, and then kind of put you on a plan to be able to meet your, you know, your goal of purchasing your home, a first home, even a move-up home. Frankly, a move-up home is really important because I have had people call me and they're in contract on their new dream home, right? And we don't even have a plan. Do they have to sell? Do they not have to sell? Where's the money coming for the down? I mean, honestly, this is super important. And on a move-up borrower, I mean, the last thing you ever want to do is have them be homeless, you know? So sometimes they list their home right away and then they don't know if they can buy, you know, or they just assume they can. So it's super, super important, you guys, to get your buyers in with a lender sooner than later, just as soon as possible. And I go over, you know, I have a program that I go over and all the questions that I ask in my interview, because I want to make sure that we're doing what's right for them. Because like I said, every situation is unique. And so it's not like, oh yeah, my friend just did this. Okay, well, your friend, you know, just got a $500,000 inheritance. You didn't know that part. You know, whatever. There's always extenuating circumstances. So everyone is is individual, and we need to speak with them personally.
Gina, do you have a checklist of questions that you ask them for their plan?
I do. I do have a checklist that I use. I've been doing this for 23 years. So I tend to just start a conversation and then just kind of go in. I go in deep pretty fast as to what's the goal is the first thing. And then talking about so how's your credit? Why is it that? What's going on? Those types of things. And what's the plan for the future? But yes, absolutely. I can share that with you if you're.
That'd be great.
Okay.
I can get you her email.
Right. Kim. Okay.
Yes, thank you.
Sure. Appreciate it.
So I don't want to keep everybody too long. I mean, it's been about a half hour, and I know everybody has busy
We're doing
days
good.
Friday. If anybody has any questions, speak now or forever hold your peace. You can either chat it or you can talk. You may be muted, but we're here to ask questions. If you have any, you can also contact me or Gina afterwards. Go ahead, Michelle.
I have a quick one. So Gina, have you seen any appraisals coming in with the COVID adjustment on them?
I have not yet. And actually, I was just on the phone with our appraisal person, main group. We work almost specifically with Norris Properties, who are some of the best appraisers in town. And he so far, frankly, said just yesterday that he's not seeing declines either in value. So, but no, I have not seen anything come in with anything regarding COVID. However, the appraisal I received yesterday was as of a date of 4/2. So it might start coming now, you know what I mean? As we get.
Okay, so the appraisal was done on 4/2 or ordered on 4/2.
Right, and I just got it yesterday.
Wow.
That's a long turnaround.
Yeah, but that's how far we are. We used to literally give them 10 days, and now we're at about 15 to 20 days to turn the appraisal.
Are these appraisers all doing drive-bys only?
Okay, that's a good question. No, not necessarily.
Yeah.
Yet.
I've had two drive-bys.
We are, so there's a whole thing about the drive-by. Sometimes it just really depends on the appraisal, but for purchases, we typically really want a full appraisal, right? Because I'm afraid that the more drive-bys we get, that in itself is going to start lowering our values, in my opinion. Because you'll never get as much, what is Trish saying? You'll never get, typically, I don't want to say never, but you typically won't get as much value out of the property if you're unable to go into the property. And also, a lot of times, tax records are wrong on your square footage and stuff. Important to have that appraiser measure the property, view the property, So, and so far we haven't had a problem with it. I'm sure there will, be somebody that doesn't want someone coming in or vice versa, the appraiser, but so far we've been really lucky with that. However, sometimes if there's one that you just feel really solid on value, which I don't know that I'd ever feel that confident, but the drive-by is a nice option for people. But on a purchase, I don't love it. I just don't love it unless
we have
appraisal waiver. If we got the appraisal waiver for through the automated underwriter, then I feel much more confident with that. We're fine, right? Value's fine. But when we start doing drive-bys, I'm afraid our value, they're going to start getting
right.
Is what I'm afraid of. And it'll take time, but it'll chip away, you know what I mean?
Trish,
a comment we had from an appraiser on a drive-by was that the listing agent had so many photos in the MLS. So they actually just measured the exterior, and there were so many photos that for them, that's what justified their ability to do the drive-by, and they felt confident about it. And we had no issues with the value or anything like that, but when they called the listing agent with just a couple questions before completing the report, they felt comfortable enough because the listing agent had so many photos in the MLS, and they measured the exterior. The house was even, it was still occupied, and they were moving and all of that out. But so that was just a comment, because the agent said, well, do you want an appointment? And they said, no, we feel good. You have so many photos in there. So maybe as a listing agent during these times, you want to increase the photos you've got.
And Carrie, that's
that situation comes up.
Once again, it's case by case. You know what I mean? If you have a listing in, say Tempe, I mean, that's, an anomaly type house, that's where you start getting into issues, is when it's not in a regular Arizona subdivision. You know what I mean? Because those values aren't going to vary by very much. But when you get into these unique homes or
custom homes,
custom, and then, or, downtown Phoenix, you know what I mean? Some homes that, I mean, they kind of need to go in and do their thing, but it is nice to have it available. And once again, as in with all things business and personal, communication is key. And it sounds like, Carrie, they did the right thing by communicating heavily with the appraiser and or lender, and and just made sure everybody was comfortable with it. And I think maybe great example.
Maybe virtual appraisal walkthroughs is going to be the next.
Well, you never know, man. The one thing I know for sure is that we're always changing.
Yeah.
We're evolving as fast as we can.
Right.
Appraisers are hard working and doing the best they can with this. And I've been, we've been very blessed that things have gone very smoothly so far with me and my deals and my company. So I'm very pleased.
Good. I have my duplex that's under contract. My seller is also on the phone, and I may actually see if the appraiser wants to do a virtual walkthrough.
There's an idea.
Talk to them. I mean, they haven't called me yet. We just had the inspection, but hey, like, what is your plan? Are you going to come out? Are you going to look at pictures?
Exactly. I think that right there, Sarina, is the conversation that needs to take place at the beginning, and just say, well, we know that, I mean, COVID exists. We got to deal with it. We can't pretend and put our heads in the sand. I mean, it does exist. And
no, I'm quarantined. My husband has it, so it is here. So, but he's better. So it's good.
Thank goodness.
Yeah.
Oh,
he didn't have to go to the hospital or anything. So,
whew, thank goodness. Oh, did we answer Trisha's question?
She had a comment about she had an appraisal done on one of her listings that was under contract for $320,000. It came in $25,000 lower. Same square foot house across the street with less upgrades came in at $315,000, which was their sales price. So, yeah, I don't know. I mean, I would probably fight that. I would too. Actually get it changed, but I would definitely fight it. $25,000 on a $320,000 is a lot, especially if it sounds like it looks like they went in multiple offers and it went in over list price.
Well, Trish, did that appraisal go in, or?
No, I'd be interested to know when the $315,000 closed.
Good question.
It was because closing and under contract, can be two different things. And if it was like closer to that 6-month window or even 4-month window, it went under contract in the frenzy before maybe this hit. And that, I mean, I'm not saying it should be $25,000 lower, but that can really affect. People really need to look at under contract date right now when they're comping.
I think that's a good point.
What did she say? Trying to get a copy. Trying to get a copy of the other appraisal. Oh, okay, that's good. So
good strategy. And who is this, Sarina?
Georgie.
He likes the idea of getting a copy of the appraisal.
I know. So, a couple of the things I'm thinking about doing in the future are like, in 2 weeks, I have one of my friends who's an interior designer coming on, and she's going to talk about trends and color and renovations and things that you should or shouldn't do. I actually am going to try to get one of my home inspectors on to talk about things that he sees the most, because, one of my clients that just had an inspection a couple weeks ago said, like, what should we be prepared for? And I was like, great question, because, you know, yeah, there are things that you could take a look at, like even just little things like, you know, changing your air conditioning filters, like the things that we see the most on the inspection reports, you can take care of ahead of time.
Mm-hmm.
So that's another one I'm kind of looking at. I don't know, I'm going to brainstorm, but I appreciate everybody coming on. And, you know, if you have any questions, I have Gina's contact information. You can reach out to me. But, you know, I don't want to keep everybody too long because then, you know, you won't come back. Thank you. George,
Is there any other, is there another chat there? Another question?
let me
Trish
see.
just said, we're trying to get a copy of the other appraisal. It's not closed yet. We will fight it.
Good. Good girl, Trish. That's my Trish. All right, great. Well, this was fun. I think it went really well. I'm very pleased.
Thank you, Gina.
Thank you,
Thank
everybody.
you. Thank you for having me.
Friday.
Thank you.
Talk to you later.
Bye, guys.
Bye.
Bye.